What's up, everyone? It's Scotty with Money Investing. So we've got a big week on our hands. There's a lot to unpack. We've got Jerome Powell and FOMC, and not to mention a slew of earnings calls and earnings reports coming out. There's going to be a lot of companies that are going to be reporting their numbers next week. So I hope you guys enjoy this video. Find it helpful. If you do, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. The link to our Discord and Patreon is going to be down below. We'd love to have you on board. There is a 16% annual discount that's available till the end of this month. So you can access all the buy and sell alerts, options alerts, trade ideas, intrinsic values, private videos, tutorials, educational content. And speaking of options, I am happy to announce and share that we have now launched a brand new options course, which is going to go over everything that you can possibly imagine when it comes to selling options and generating cash flow and generating income through options. I'm also going to go over some other strategies, and there's going to be new content that's constantly added to this course. So this was just released today. The coupon is going to be launch, and you can get a 50% discount. This is probably going to be the biggest sale of the year because we're just launching this for the first time. So again, if you want to take advantage of that and learn how to generate income, how to generate cash flow through selling options, link's going to be down below. This is a very, very conservative strategy. So I'm going to be very straight up. So if you're looking for an option strategy that's going to make you hundreds of percentage of and thousands of dollars, this may not be it. It takes time, it takes patience, it takes very much of a discipline in order to get to where you want to be when it comes to selling options and generating income. But the good thing is that once you learn this skill, you can pretty much leverage this for the rest of your life. And as your portfolio grows, you can use this strategy. You can use these strategies. There's going to be a lot of them to generate cash flow. And there's over 20 lectures. And I'm going to constantly be adding more and more videos. So again, coupon code launch, 50% off just for today and tomorrow if you want to take advantage of that as well. So this right here is going to be the earnings calendar. So we do have, starting with Domino's on Monday before the market opens. We've got NXP, another semiconductor. I think I've done a couple videos on this company as well. We've got Verizon before the bell on Tuesday. We got General Motors, 3M, General Electric, Spotify, Nucor, Raytheon Technologies, and NextEra Energy. After the bell on Tuesday, of course, we've got Microsoft and Google, some of the biggest companies in the world and in the US. Snapchat is reporting. We got Visa. I've already done a video on both Visa and Google. Teladoc is reporting after the bell, as well as Texas Instruments. And then on Wednesday, we've got AT&T, Boeing, Coca-Cola, Tilray, we got ADP, and Union Pacific. And then, of course, on Wednesday after the bell, we've got Meta Platforms, Chipotle, got ServiceNow, Lam Research, QuantumScape, and eBay reporting their numbers as well. And then, of course, on Thursday, we got Royal Caribbean, McDonald's, Southwest, MasterCard, Crocs, Valero, AbbVie, Bristol-Myers, Honeywell, Enphase Energy reporting on Thursday after the bell. One of the positions that I'm actually building right now: Ford, Intel, Roku. We've got First Solar, Dexcom, T-Mobile, United States Steel, and Clack Corporation as well, which again is another semiconductor and chip manufacturer. We got ExxonMobil, PNG, which is Procter & Gamble, and Chevron reporting on Friday before the market opens. So it is going to be a very packed week. There's going to be earnings left and right from a lot of companies. A lot of S&P 500, NASDAQ, and the Dow Jones companies are going to be reporting. So it could get real volatile. And of course, don't forget Monday, we've also got the NASDAQ rebalancing that also takes place, which is also going to create maybe some more volatility in the market. Now, going over to the calendars. So starting with Monday, we have the manufacturing PMI numbers coming out at 9:45 a.m. Eastern. The forecast is 46.4, which is going to be slightly better than the previous number of 46.3. We've also got the 2-year note auction. 4.67% is going to be that yield from the previous report. And of course, that comes out at 1 p.m. Eastern. Then we've got the consumer confidence, and we've got the 5-year note auction and the API weekly crude oil stock that comes out on Tuesday, July 25th. Now, the big day is going to be Wednesday. So Wednesday, July 26th is when we have the FOMC meeting. That's the Federal Reserve's meeting that they do. And of course, the expectations right now are for us to see maybe another 25 basis points increase. And then the rates getting up to 5.5%. We've got the building permits. We've got the new home sales. We've got the crude oil inventories. But the real fun begins at 2 p.m. Eastern on that day, on Wednesday, July 26th, when we have the FOMC statement. We've got the Federal Reserve's interest rate decision, and of course the press conference as well. And of course, many strategists and economists and even the market right now is projecting a 25 basis point increase when it comes to the actual interest rates. But that's the Fed funds rate. This right here is going to be Thursday. So GDP numbers come out on Thursday, as well as retail inventories, pending home sales, initial jobless claims. So that is, again, going to be very important. This is going to be the second estimate for the second quarter, I believe, and that's going to be 1.8%. That's the expectations. And price index expected to be at 3%. Initial jobless claims at 233,000. Pending home sales to have increased 0.1% month over month after a significant decline last month at negative 2.7%. And of course, we've got the 7-year note auction and the Fed's balance sheet that comes out pretty much every Thursday as well. And then finally, we got Friday, where the PCE numbers, the inflation numbers, and the consumer sentiment is scheduled to come out as well. So we got the core PCE, we got employment cost index, we got the actual PCE price index on a year-over-year basis. Then we've got the 5-year inflation expectations. That's the Michigan Consumer Survey, and of course, consumer expectations, consumer sentiment, and inflation expectations for the month of July also comes out. So there's a lot of economic data. There's a lot of earnings data. And of course, we got the NASDAQ rebalancing. So it is going to get real crazy, real fast in the markets here in the last week of July. And you can see the markets right now pricing in about a 25 basis points, already a done deal, 99% probability that we're going to see another 25 basis points and stay there for longer, so higher for longer until the end of this year, and then starting with rate cuts in March of next year, and then bringing that down all the way to 4 to 4.25%, and that's going to be 1, 2, 3, 4, 5 cuts that the market is pricing in right now. Many, of course, believe that the Federal Reserve is going to do another rate hike after this July one, so we could get up to 5.5 to 5.75%. That's what the few people also believe, and that's exactly what the Federal Reserve has also told us, that they are going to raise rates even further. And we're going to see potentially 2 additional rate hikes, and that's including the July meeting as well. Now, going over to the markets, as I've already mentioned, I think it is very normal. I think that's a very reasonable for us to expect maybe a dip or a pullback from the market. So that's going to be at about a 2 to 5% sell-off in the market. Again, nothing to write home about, nothing to be going crazy over, and that is going to just put us down to as low as 44.50, right? So from S&P 500 current level at 45.36, that's going to be about a 2.5% sell-off. It's going to put us down to that 21 EMA kind of in line with that support at 44.50. And same thing is going to be true for the NASDAQ. As you can see that we are already starting to come down. So a potential pullback down to 13,800 is going to put us down a little bit over 4%. Again, very reasonable, very safe to assume that that is a possibility considering a 25 basis points and of course what the Federal Reserve ends up saying with respect to inflation and the path moving forward when it comes to interest rates. One thing is clear: if the Federal Reserve gives us any hint, and if the Federal Reserve is even remotely hawkish and gives us a little bit of a some hawkish narrative that they are going to be raising rates even further, and another 25 basis points maybe is in the pipeline, the market most certainly is not going to like that very much. And it's possible that we do see that pullback and that dip come into fruition and, of course, sell off even further. But, of course, if you do break down below those levels, if you do break down below that 21 EMA, below those support levels, then that could lead to a potential correction in the markets as well, something that we have to pay attention to in the future. So that's going to be it for today. Again, very, very important week with the FOMC and the Fed, and of course the earnings week. I will be doing a lot of videos, a lot of individual stock analysis and videos for earnings for these companies that are reporting earnings. So keep a close eye on that as well. As always, if you enjoyed this video, found it helpful, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. And don't forget, we do have the options course that is just launched, brand new, 50% off for the next couple days. Coupon code is going to be launch if you want to take advantage of that as well. Happy investing, and I'll see you all in the next video.